Welcome back. I'm Pratap here. Today is 22nd April 2024. In this video, let us have a detailed analysis on Nifty 50. So let us analyze from the monthly time frame. So earlier we have drawn a monthly zone here. We have a drop, two base candles. Actually this leg candle is also part of the base. And then we have a leg out candle. So this is the way we have drawn the monthly demand zone even earlier. So let me change the color to monthly demand zone color. And also let me add the text monthly demand zone. And this monthly demand zone is having daily EMA confluence. And also there is a overextension is also there. This is about the monthly time frame. Now let's get into the weekly time frame. And weekly we have two zones. This is the weekly supply demand zone chain. This is the weekly supply zone created during this week, the week that is completed on last Friday. And also we have a weekly demand zone also. So let's draw both these zones. And even one more announcement, please. Actually, I forgot. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. In case if this is your first visit to our channel, please understand we kept all the training videos related to supply demand zone price action in a playlist, supply demand zone price action course at our YouTube channel. Even I have provided the link to this playlist in this YouTube video description. So there you click the link, you will get into this page and then scroll down to the bottom. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to Telegram channel in this YouTube video description. Please join in that channel, it will be helpful to you. Each time when we release a new video, we will provide an update in the channel. Now let's continue with our supply demand Nifty 50 supply demand zone analysis based on supply demand zone chain. So look into the weekly. Here we have two weekly zones. One is a drop base rally as per our NeoStock software. So this is the weekly demand zone. Let me change the color to weekly. And also let me name, this is a weekly demand zone. And also notice here also we have this weekly demand zone is having weekly EMA confluence. And last week the weekly EMA overextension is completed. Earlier we had a overextension. That overextension is completed. See the moment prices reach to this weekly EMA, how see the rejection, strong rejection on the weekly time frame. This rejection is mainly because of the completion of the overextension. And also we have seen there was a institutional trap at this area during the last week. The prices reached that 5 minutes demand zone trap. We named it as a bear trap. All bears are trapped here. And after that 350 points move we have seen on last Friday. Exactly the same we discussed during last video. The 5-minute zone will act as a trap, that is what I told. In case if you miss the discussion, please attend that. It will be a learning for you. And from that 5 minutes trap, we have seen a push 350. There is a possibility some more points also it may go today. After that again it will get into some supply area. After that again it will push the prices down. That we will see. But here the reason why we are discussing about again prices will be pushed after some time. We have a weekly newly created supply zone. We have a rally, two base candles and a drop. You might be wondering, is it a drop candle? Yes, at the hidden body. If you add the hidden body, some more body will be added to this candle. Then this is going to be a drop candle. So this is the way you can draw a zone, weekly supply zone, and see the gap between weekly demand zone and supply zone. This is a weekly supply zone. And this is weekly demand zone. Now definitely this week there will be a fight between these two zones. But also we should observe prices went more deep inside. After that, what kind of zones are created at lower time frame within this week? This is also we should understand. Based on that only we can understand how strong the demand in this particular zone. So now let us change it to daily time frame and let us generate the chain, daily chain. So I'm changing the time frame to the daily. Let me generate the daily chain, and here also let me change the time frame. Okay, daily chain is generated, and we haven't seen any daily supply zones here. We have only lower time frame zones here. Last week we discussed this is not a rally, this is not a drop based drop. There is no daily zone here because this is a rally candle. If you add the hidden body, drop, rally, drop without a base candle. So all these gaps, hidden gaps, all these are all because of lower time frame zones, not at the daily. Obviously lower time frame zones, they will be having a life period for lower time only, not as good as a weekly or daily. But anyway, we have this weekly is not having daily zone. This weekly is only having maybe 125 or 75 or maybe 15 minutes time frame zones. Okay, let us draw the daily zone. Here one zone is pierced. Let us leave that. The immediately available demand zone is already tested 2 times. Let us draw. This is 12/2/2024 at one base candle. The 12/2. This is the one. We have a drop base rally. This is the source for creation of the weekly demand zone. That's why it is having some importance. And I'm changing the color to daily demand zone, and also let me mark the text with this is not a high liquidity zone. This is a daily demand zone, but it is having importance because it is responsible for the creation of this weekly demand zone. Orders are picked up from this daily demand zone and then weekly zone is created. Already tested 2 times. This is the first test and probably this could be the second test. Didn't reach, but it came very close within the entry buffer area of this daily demand zone. Prices reached. Okay, this is about daily demand zone at this point of time. Let's don't get into the next level. If this is violated, then in the next time we will discuss. And what about the daily zone, the supply zone? There is no daily supply zone. We will be having only lower time frame zones. So that's why let us focus on that. I'm changing the time frame to 125 minutes. Let me generate the chain. And here also let me change the time frame to 125 minutes. We have an immediate 125 minutes supply zones are available. We have 3 supply zones, and also we have a demand zone, the 4th one, when it is created on 25/1/915. After that 2 base candles. (25/1/915). So it's very far away from the daily demand zone. But anyway, let us mark this is the immediately available 125 minutes demand zone. And we will focus on this once this daily zone is violated. And the supply zones are available. So what is the immediately available? Already tested once, 16.4, 13.25, after the 2 base candles. This is the one, 16.4, 13.25 and these 2 base candles. So now prices are entered into this 125-minute zone, but this is the normal zone only. But inside there are any high liquidity zones that we need to check. So this is 125 minutes supply zone. But the high liquidity zone we should give more importance from now onwards. We have a high liquidity supply zone already tested once. This is 15.4, 9.15. 2 base candles. This is the one 15.4, 9.15, 2 base candles. This is a LOTL zone. (125 minutes) high liquidity supply zone. Actually, this is the newly created LOTL. This is picked up the orders from here. So let me delete this. Let us give priority to this. This is the high liquidity area. Let us see its behavior. These are the orders. Of course, this is zone created here, but picked up the orders from here. So let us focus in this area. And now what we do? Let's move on to the next time frame. That is 75 minutes time frame. So in 75 minutes time frame, let us generate the chain. Meanwhile, here also let me change the time frame to see here rally base created. In case if market is opened with a gap up and prices went, a new candle will be created, demand zone. 75 minutes demand zone. If it is down, supply will be created. Let us see in today what will happen to the market. So this is a Pierce demand zone. Let us leave. The next demand zone is when? 14 to 11.45. This is the one 14 to 11.45. After that, one base candle. This is the immediately available 75 minutes demand zone. This was the daily. This is 75 minutes demand zone. Okay. So that means earlier orders are exactly picked up from this 75 minutes area. This fine-tuned 75 minutes inside the daily. And then created this weekly demand zone. This is the immediately available. Then what is the immediately available supply zone? 18.4, one base candle. This is 18.4 at 10:30. Yeah, 10:30, one base candle. Here we have a fine-tuned inside. This is 75 minutes. I need to change the color. I will do that. This is 75 minutes supply zone. But here also we will be having a 75 minutes supply zone. 15-4, 9-15, 3 base candles. This is the one, 15-4, 9-15, 3 base candles. So actually this is the one picked up the orders from here. So let me delete. This is the main source. This is 75 minutes supply zone. But these are the normal zones only. So we have 125, inside 125 overlapped with 75. Let me check once again. 15-4, 9-15, 3 base candles. This is the 15-4, 9-15, 1, 2, 3 base candles, and this is a drop candle. That is 15-4, 14-15. So exactly. Either with the rally base drop from here again, it will, or the actual source where the order flow is here. One of these areas. This is LOTL, rally base drop. I'm just drawing only the main order flow. This also you can draw 75. So this is LOTL. Maybe prices may enter here, or it may go a little, because this is the main source. Either thing can happen. So this entire thing is 75 minutes area. Okay, now let's move on to the next time frame. But is there any high liquidities? No high liquidities earlier. We have a drop, 2 base candles drop. This is also there. This is also 75 minutes. So now let's move on to the next time frame, 25 minutes. Now we'll see only high liquidity zones. I don't concentrate on the remaining zones, but you will be seeing the list so that you can draw on your own. Okay, here we have a high liquidity supply zone. $18.4, 10. $18.4, 10.55, 1, 2, 3, 4. So this is also not only 75, this is a 25 minutes high liquidity supply zone. And also this is a 75 also, the LOTL. But this is the main source, 75 minute supply zone. And this is the origin, main origin. And the demand zones, we have no high liquidity demand zones. So 12th only the high liquidity one. Earlier we have 2 low priority. This is at 13.12. And the nearest is, this is a 20. $23, 10.5. This is 23 March. Sorry, 20 March. 20 March, 10.5. Here we have 20 March 10:05 and 20 March 11:20. So this is at 25 minutes. This is the 25 minutes low priority high liquidity demand zone. I just picked up the orders from this area. Here only we have 5 minutes high liquidity zone, daily time frame. Probably here 5 minutes is there, so it picked up the orders. So this was the source where the order flow for this entire move on last Friday. Okay, now let's move on to the next time frame, 15 minutes. Let me generate the chain, and here also I am changing the time frame to 15 minutes. Here 15 minutes high liquidity demand zone is created when 1914, 1904, 1230, 4 base candles. So this is a high liquidity 15 minutes demand zone. High liquidity demand zone. After that we have only 14-2, 13-15. 14-2 means somewhere maybe here. 14-2 within this area. Yeah, here inside this 75 minutes. Here we have 15 minutes high liquidity demand zone. So let me cross check once again. 14-2, 13-15, 2 base candles at 14 hours leg out. 8-1. 14-2, 13-15, 2 base candles, 14 hours. So exactly this is the. So what about the supply zones? We have a PR supply zone. Let us leave that. We have a low priority high liquidity supply zone when it is 18-4, 12-15, 3 base candles. The same, the 25 minutes HLQ supply zone is also, but here 3 base candles, right? 18-4, 12-15, yeah, 3 base candles. 18-4, 13-15. So this 25 minutes high liquidity supply zone is also 15 minutes. The same zone can be used for 15 minutes low priority high liquidity supply zone. Both are high liquidity, but one is low priority, one is high priority. That is the only difference. After that, there is one more already tested 3 times, but this is pierced. Pierced count 0. So we have this is the only one valid high liquidity supply zone. In case if the supply zone is violated, the remaining supply is not very strong within this weekly area. So far, until 15 minutes time point of view, the remaining supplies are not strong. The weekly supply is created. Why it is not strong? Because within weekly supply zone, there is no daily supply zone. Maybe it could be a kind of trap. Institutions created a feeling to us. They created a weekly supply zone. Generally, by seeing weekly supply zone, we feel, oh, there is a weekly zone, very strong order flow will be there. But actually, that is not true. How strong the order flow, that is all depending on the fine-tuned zones. There is no weekly fine-tuned zone. Daily zone is not there. That means you have low priority zones. Within that fine-tuned zone should be there. At present, this is the only source. If this is violated, probably prices may easily go up. This 75 minutes fine-tuned also I am not really convinced. Not good structures are available here. Maybe this 75 minute zone also might be violated easily. That possibility is there. At present there is only drop, base, drop. This is the valid. This is the valid 15 minute zone. This is a 15 minute supply zone. 15 minutes supply zone. This is the 15 minute supply zone, fine-tuned at present. But this is also, see how it fine-tuned. Most of this zone came out of this 75 minute zone. Anyway, this 75 is a normal zone, not even high liquidity zone. Now let's move on to the next last time frame, that is a 5 minutes time frame. Let me generate the chain, and here also let us change the time frame to 5 minutes. What is the structure here? Here also 1, 2, 3, 4, 5, all this. Maybe this entire thing could be our 5 minute zone. Have a drop, 1, 2, 3, 4, 5 base candles. This is the way you can draw the 5 minutes. We have a fine-tuned 5 minutes area here. Like this you can draw. Actually 5 minute supply zone is bigger than 15 minute zone. But we will see this is high liquidity or normal. Once we get into the chain, supply demand zone chain, we will understand. First, this is the 5 minutes zone. So let us look into the immediately available. Immediately 5 and 6 we have high liquidity zones available. What is the first available 5 minutes high liquidity zone? This is, remember C underscore SZ, they are, its priority is low in a 5 minutes time frame. If it is S underscore SZ, sorry, R underscore SZ, it could be much strong, but all these are all C underscore SZ. C underscore SZ are low priority, and it is already tested once. But is it going to hold second time? We don't know. But anyway, let us look into this, where it is a 15-4, 14-10, one base candle. 15-4, 14-10. 15.4, 14.10. So this is the one. This is a 5 minutes supply zone. How strong it is going to be, we don't know, but it is already tested once here. Came very close here also. So holding the prices, it didn't let. This 5 minutes high liquidity supply zone actually holding the prices. Here also, it didn't let the prices go beyond this. Okay, this is the 5 minutes high liquidity supply zone immediately available. And what is the next one? Next one is 12.4, 3 base candles. 12.4, 15.10. 12.4, 15.10. Probably within this area. Yeah, 12.4, 15. Well, 4, 15.10 means this is the one. After that, 3 base candles. So that means the same 15 minutes supply zone, whatever I have drawn 5 minutes earlier, this is a 15 minutes supply zone. The same thing is also 5 minutes high liquidity zone. We have these two supply zones. When it comes to the demand zones, high liquidity demand zone, 8th one, 19.4, 12.25. So where is 19.4, 12.25? So we have a drop base rally. This is a high liquidity demand zone. I mean 5 minutes high liquidity demand zone. But above there is one more, 19.4, 13.35. This is a fine-tuned. Inside this 5 minutes, 15 minutes high liquidity. This is just only a fine-tuned demand zone. This is a normal demand zone, but it is fine-tuned. Inside this 15 minutes high liquidity, drop base rally. But this drop base rally is below 15 minute zone, high liquidity demand zone. So these two demand zones we have drawn. There is one more normal demand zone, 12.10. Rally, base, rally. These are all normal demand zones. You can draw them. So that's it. These are the immediately available demand zones within this area. So how the Nifty movement is going to be? Probably today the movement could be like this. We may say this could be the range. The immediately available range. But let me draw the info line. So we have around how many points? 396 points range is here, from here to here. £396 range. And if this is violated, we don't know how strong the next one is going to be. Here we have only 5 minutes high liquidity is there, fine tuned. If this 75 minutes can hold, then probably if this is violated, the next one could be the range. Otherwise, if this is also violated, probably Nifty will be again going to the all-time high. This weekly supply zone is not strong compared to this weekly supply zone. But this strength might be increased next time when prices are entering here, if institutions create a new daily demand zone inside this and again pushes the prices down. At the time, market scenarios will change. But as of now, the supply is not very strong in this weekly supply zone area. But possibility is there. Institutions may create a new daily demand zone inside next time and push the prices down. That possibility is also there. Because we cannot rule out anything. But as of now, what is the picture? That picture, if you want to discuss, weekly picture is not very strong. At present, this is the supply. We have to trust, but we don't know how strong it is going to be. But what about demand? The demand is also not strong in this area, because we have a demand zone below weekly demand zone having confluence. This demand zone probably some good order flow might be there. That's why all these days this weekly demand zone holded the prices, because this is the one actually pushing the prices up. See, last time also came very close to this demand zone. Here price came very close to the demand zone and then pushed up because of the 5 minutes bear trap what we have seen. That pushed this entire prices up. Basically, nicely created a trap institutions last week within this weekly demand zone. Initially, they made sure daily zone, 75-minute zone, everything is violated within this. And people are feeling, okay, the supply is very strong. And people might have gone for the short orders. Because some of these daily and 75-minute zones are violated, people would have, their stop losses would have triggered. And all those demands, whoever took long orders earlier, because stop losses are triggered, they would have exited with short orders. And all these short orders are captured by the institutions in the 5 minutes bull trap area. And finally it pushed the prices. The last video we predicted that. How nicely institutions set the trap. Okay, at present this is the picture. If one of these zones are violated, suppose if these zones are violated, below 5 minutes high liquidity demand zone, maybe, who knows, this could be a short-term trap for this 15-minute zone. There is a possibility this 15-minute zone will be violated and orders might be picked up from this 5 minutes high liquidity demand zone. That possibility is there. If that is the case, we need to extend the range to this area. Maybe we can say this could be the range. If these levels are broken, probably prices will be reaching to this particular daily zone area. Just before this daily zone, we have 25 minutes low priority, high liquidity zone is there. Because actually prices are picked up from that 25 minutes low priority, their 5 minutes high liquidity zone is there. And then prices moved up. Okay, this is about Nifty 50 analysis. And if one of these levels are violated, what will happen, that we will see in our next videos. Okay, let us take a break here and we'll continue from here our next video. Thank you.